Next panel discussion on global trade tensions, the economic impact and policy responses in the Middle East and North Africa region. Now, of course, across the world, trade tensions have been reshaping economic landscapes, redrawing supply chains, and testing the resilience of national and regional economies. Nowhere, perhaps it is fair to say, are these pressures felt more acutely than in the Middle East and North Africa, a region that is deeply interconnected with global markets through energy, through trade, through investment. Our next panel will be exploring these global trade tensions and challenges and looking at how the MENA region is absorbing the impact and formulating policy responses as a result. It is my pleasure now to introduce and invite to the stage our distinguished panelists, Their Excellencies Ali bin Ahmed Al Kuwari, Minister of Finance of the State of Qatar, His Excellency Mohammed Aurangzeb, Minister of Finance of the Islamic Republic of Pakistan, and last but not least, Bo Lee, Deputy Managing Director of the International Monetary Fund. And please join me in welcoming our moderator, CNN, Eleni Giokos.
One, two, one, two. Ah, there we go. Good morning, ladies and gentlemen, Your Excellencies. Fantastic to be with you today. And what a fantastic morning it is, and a great topic to go into midday, actually. We've just hit to afternoon. My name is Eleni Giokos. I'm delighted to be with you, and importantly, to talk about one of the most pertinent issues, I think, not only facing this region, but also the world. And we talk about the global trade war. We talk about confrontation between the two mega powers, China and the United States. A lot of countries are collateral damage. Some countries are completely impacted directly, and perhaps offering opportunities to create more alliances, particularly the global south, and we're seeing a rise of that. Your Excellency, it's so good to have you with us. And Minister, I want to start off with you. I want to talk about how Qatar has been directly and or indirectly impacted by this global trade war, because you're in an interesting position. Your trade with China has increased dramatically over the last decade. You also have good relations with the United States, so break that down for me.
Yes, it's okay. Here we are. Thank you very much. I mean, of course, I mean, Qatar, we believe in free trade, you know. I mean, 60%, you know, our trade represents 60% of our GDP. And we will, I mean, and because we are, you know, we are part of the hydrocarbon, you know, we are an energy supplier of the world, and so it's extremely important for us. In terms of, like, you know, the recent, you know, trade policies and, you know, trade tariffs, I don't think Qatar was affected so much by that, because, you know, I mean, again, you know, most of our exports are in the energy side, and we have less, you know, other commodities, you know, that can be affected. And Qatar was among, you know, I mean, for example, if you are referring to the U.S. tariffs, you know, I mean, in the minimum 10%, you know, application. So, but we believe, like, you know, I mean, free trade, we believe, like, you know, very important to build the rules-based system, you know, and strengthen the world organizations, you know, like IMF, you know, next to me, and the WTO and other organizations, and to go back to, you know, a reasonable rules of engagement when it comes to trade, you know, and doing business between countries. And as I said, I mean, Qatar, because of our, you know, main, you know, exports is in the hydrocarbon. I mean, we're enjoying, you know, good relationship with everybody, China, others, you know, US, and I don't believe like there is a problem with that. You know, I think, you know, China is very important. US is extremely important. And we are maintaining a relationship with both countries, in both in economy and GDP. In terms of also Qatar, we have been very disciplined in our fiscal policy framework. We have built a medium-term fiscal policy framework, which is focusing, having a look, to the scenarios of revenues and, expenses for the next 20 years, and under different scenarios, stress scenarios, good scenarios. And we build discipline, around this one. So we decide, what we do with surpluses, how much it goes to reduce debt, how much it goes to Qatar Investment Authority for investments, and how much goes to Qatar Central Bank for enhancing the reserves. So we have, and we've been very disciplined in our approach, for this one. And we are one of the luckiest countries, we have good, fiscal buffers,
I've got a quick question on that. When you talk about discipline, have you been forced to be a lot more disciplined because of the trade war? Is it just been an approach that you've always taken?
Mm-hmm. No, actually, this is our approach, and this is our strategy. Fiscal sustainability is extremely important, and we have built this fiscal sustainability framework even before the trade war. So we don't. And the idea behind it is to be resilient, to shocks, COVID, trade wars. So the idea of building discipline is really, not to be reactive, whenever there is, not to be so generous during the good times, and not to be, tough during the bad times. So to be consistent in our approach. And this was embraced by organizations like the IMF, they embraced our approach on the fiscal policy framework. And, so in terms of our fiscal discipline, I think it's extremely important. And this is one important way to mitigate, trade wars, policies, shocks, that happens from time to time. Because to be reactive, every time to shocks and to problems, I think it's a problem for many countries.
Fantastic. And it's sort of this counter-cyclical approach. What does it say? Spend when things are bad and you need it, and save when things are good. DMD Lee, I want you to jump in here from an IMF perspective, because you guys have really been crunching the numbers and looking at the data, not only for this region, but globally as well. And I think when we started hearing about this trade war, this imminent trade war, and then the lead up to the confrontation and tit for tat, and the overall impact on inflation, on economies, cost of living and so forth, the numbers tell quite an interesting story. Take me through that.
Thank you very much. Well, the global economy is doing better than feared as compared to the forecast in last April. The global economy has held up quite well so far. It shows some resilience. The policy fundamentals in many countries in the last couple of decades have built a lot of buffers and also a lot of response room to weather through such an uncertain time. So our forecast for this year for the global economy to grow at 3.2%, which is still slowing down compared to last year, 3.3%. But it's better than what we feared, because back in April, at the height of trade disruption, the fear was even worse. So the reason for that, as I said, is that there is a policy buffer, there is a policy resilience in many countries. And also we see private sector to adapt quite nimbly with agility and with innovation. That also give a boost to the global economy. And finally, fiscal policy in several regions, including in Europe, in China, those fiscal stimulus also help to support the global economy. If we look at the region in this Middle East and Central Asia region, our forecast is that GDP will grow at 3.2% this year and 3.7% in 2026. This region also showed resilience. Again, we see many countries in this region adopting the right policies in the last a decade. Countries like Qatar, like Pakistan, they're embarking on a reform path that are building fiscal resilience, but also financial resilience. That also will support the economy to grow at a robust rate. Finally, even though we have seen resilience in the global economy and also in this region, we are also seeing risks, downside risks in the next several years. One risk, of course, is the global uncertainty that we have seen this year. And this global uncertainty will continue to weigh the economy downward. Our analysis estimate that the global trade uncertainty could potentially drag down the growth in this region, in the Middle East and Central Asia, by as much as 2.5% over 2 years. So we need to have proper policy response, and also we urge countries to come together to resolve their trade dispute, because otherwise we're going to continue to see a lot of headwinds in the global economy. I stop here.
Yeah, really interesting. So just to confirm what you said, right now, and this is important, softer than anticipated, the impact. I'm reading from you that perhaps we haven't fully felt it yet. So the risk is, and I like to use what IMF, you guys like focusing on the weather, dark clouds emerging, potentially, on trade, and that could slowly shave off growth. And I think that's really important for us to remember as this conversation continues. Minister Aurangzeb, it's great to have you with us. About a year ago, you were able to secure IMF assistance of $7 billion. And you, through that loan, have been able to secure fiscal stability, macroeconomic stability. And then you're thrown into this trade scenario that's playing out with the United States. Tariffs you were able to secure 19% tariffs specifically on textile exports. The numbers right now, I want you to take me through what the impact has been from President Trump's tariff war.
Yeah, so since this time that we got into the extended fund program with IMF, it was not only about reaching macroeconomic stability, but also continuing with the structural reforms, whatever we are doing in taxation, energy, state-owned enterprises, etc. And as the Deputy Managing Director said, part of the reasons why some of the emerging markets are continuing to weather this is because of structural reforms and the role of the private sector, both which are extremely important in Pakistan. Now, coming back to the trade equation, since I led the discussions myself with the US, with Ambassador Greer and Secretary Lutnick, from our perspective, we have landed relatively well at 19%, because it's all about regional competitiveness in the areas that we compete, especially in textiles, etc., which go to the US, and especially in the area of homemade textiles. So when we look at our regional competitors, they actually have ended up higher. So it's all relative, and therefore we haven't really seen a downside risk in that, number one. Number two, I do think, every element where you get into a little bit of an issue is also an opportunity. And for us, it has shown us that we can go towards product diversification. So IT services exports are now coming up as a very, very major area for Pakistan. From almost nowhere to almost ending up at about $4 billion of IT services export this year.
As a consequence of the trade war, basically, the uncertainty, the global confrontation.
I would say the global trade, if it, even if the uncertainty, so far, quite frankly, we haven't felt it, because a lot of tit for tat didn't happen. So that mutually disruptive, elements that we thought will happen haven't really happened. But that doesn't mean that the next year, it will not get into an issue. But my point is, it also allows us the opportunity to think differently. Yeah. So one is the product diversification. The other is the geographical diversification. So the South-South discussion, and the way we have really stepped up our efforts now with the Gulf countries in terms of increasing trade, and Central Asian republics. The reality is with Azerbaijan, Turkmenistan, Kazakhstan, we weren't really doing that much trade previously, but this year it's not a huge delta, but we have started moving in the right direction. So it's been product diversification and geographical diversification with respect to our trade strategy.
So that's really interesting. So with the uncertainty, it's brought incredible move to explore new relationships and to explore new industries. And I think that's really fascinating. Minister, I want to jump to you, and I want to look at the injection of this uncertainty into the market globally, and frankly, to the prognosis by the IMF that perhaps we could see slower growth, that would mean less demand for oil and so forth. To what extent have you priced that into your models going forward? And I'm sure, because you've been trying to diversify your economy, is this now all steam ahead, full steam ahead?
Well, I mean, it's already in our model. I mean, as I said, our model looks to different scenarios, stress scenarios as well as good scenarios. And even, I mean, to be frank, I mean, the expectations for oil prices next year is going to be lower than. So analysts, they keep reducing, their expectation of the oil prices. But this is okay. I will not say this does not matter. Of course, it matters to us. But at the end of the day, I mean, we are being mitigated by many things. I mean, the first thing, we're expanding our gas exports by almost we're doubling, our gas exports in a phased manner over the 5 years. So this will somehow mitigate, the reduction in oil prices. Also, the diversification of our economy. I mean, we started a journey, in 2007, 2008, where we put the Qatar Vision 2030. And the essence of that strategy or that vision is basically built around diversification of the economy and basically building the non-oil sectors, like technology, manufacturing, logistics, tourism. And we believe these sectors will be driving the economy. And actually, most of the growth now coming in the economy is really from the non-oil sector. For example, the first 6 months GDP of this year was 5.3% growth on the non-oil GDP. And the expectations or the plan we have is a 4% annually for the next 5 years. IMF themselves, they're expecting 4.1%, average growth for Qatar for the next 5 years. So diversification and the expansion of the LNG really will mitigate, any lower demand in oil or lower prices. But we have to be ready for that. And we, as we say, I mean, fiscal discipline and prudent, fiscal policy is extremely important for these situations, to avoid this. And to build buffers, we need to build the fiscal buffers where we don't have to run to the debt market, for example, whenever there is. So we have this movement. So when we have a good year, we save some money, for the fiscal, aside from what we do in terms of like external investment through QIA or internal investment through, Chapter 4 in our budget. But regardless of this, we have to build a buffer going forward. And as I say, this is when we build the framework, the idea is really fiscal sustainability and to build intergeneration equity for the future. So this is the idea, so to be disciplined. And to be honest, I mean, our strategy worked. We reduced debt from 58% on 2021 to 41%. And this was recognized through the IMF report, Chapter 4, as well as the rating agencies. Qatar was upgraded by 3 rating agencies to a AA, which is the highest rating in the region and among the highest in the world. So, and to be honest, it's not usual to hear these days an upgrade, for any country. So things really has been going very well. There are some challenges, yes, there are some challenges, but we are ready for it. And as I say, our fiscal policy is meant to deal with these challenges.
So you're ready for a worst case scenario, is what you're saying?
Of course, I mean, we're ready. and Qatar has been very resilient. I mean, we've been resilient to many shocks that
So you're ready for a US recession if that
absolutely.
happens?
Yes.
Yeah? Okay. DMD Lee. Minister Aurangzeb, I'm going to come to you because I want to talk about this debt and fiscal strength. But DMD Lee, I want the fiscal resilience that needs to be implemented. Tell me what needs to happen. Because frankly, it's not lost on me when we talk about Pakistan and the structural reforms that you needed to implement. It's tough. It's not an easy thing to do, but it's vital because it creates that resilience. So tell me about what you're advising countries that are highly indebted, that don't have enough foreign exchange reserve cover, and whether you're worried about the state of the world right now, and whether, not all countries can be as ready as Qatar, whether we're ready for a worst case scenario.
Well, for countries in this region, including countries with high level of public debt, we mainly have three advice. The first one is to have a robust macroeconomic policy framework, including fiscal policy framework, and also to build a macroeconomic buffer in times of uncertainty. For example, in particular for fiscal policy should be embedded in a credible medium-term framework, preferably with strong fiscal rules that can underpin fiscal sustainability. And tax system should be simple, fair, broad-based, and diversified. That's our recommendation number one. Our second advice is that not only having a fiscal rule is not enough. We need to generate growth. So it is very important to try very hard to support, to promote structural reform that can generate economic diversification and also private sector-led growth. Structural reforms include governance reform, accountability reform, business environment reform, liberalizing the product market, deepening the financial market, and attract and retain talents, and investing in human capital through education, healthcare, and digitalization. So all these reforms are important to generate growth. Our third and last advice is to stay open, to continue with regional integration. Now it's not the time to retreat from trade and investment. It is actually a time to strengthen regional trade, to strengthen regional integration. There are still a lot of room for this region, for example, to lower non-tariff barrier, to facilitate cross-border capital flow. It is not only trade, it is also financial service, financial connection, and capital flow. And also, this region is particularly positioned to be connecting several big continents, Europe, Asia, Africa. So these regions, Middle East, Central Asia, are particularly positioned to be a connector in this very uncertain world, to stay open, and more openness in this kind of environment. More openness means more resilience.
Brilliant. It's so important to continue on the path of multilateralism. I'm going to touch on that in just a moment because I want all of us to comment quite extensively on the building of partnerships. But Minister, I want to talk to you about this fiscal situation. Qatar is telling us about how they were able to bring down their debt and frankly creating those buffers. Where is Pakistan right now? And I want you to talk to me about your foreign exchange reserve cover and whether you've made headway and whether you are ready or will be ready for an external fiscal shock should we see a deterioration in the relationship between China and the United States.
Oh, that's I think number of questions in one question. I think when we talk about exogenous shocks, from our perspective, one is what you are referring to, which is the external account, but from our side also climate change. I mean, both of these are there. But over the last couple of years, we have been essentially, building those buffers. After a very long time, we have primary surpluses on the fiscal side, and current account is in surplus. And quite frankly, also being helped by a huge remittance flow, which actually flows from the MENA region, especially GCC region. It's about 18 to 20 billion dollars of remittances which come into Pakistan, which is a huge, huge factor for us. And these have been building up. It was 30 billion, now it's 38 billion. This year it's about 41 billion. So listen, we cannot be complacent where we are, right? So we will always be, continuing to build these buffers to deal with these exogenous shocks. But the main issue for us, quite frankly, is climate change and population. And maybe we can talk about it a bit later, because these are existential issues for Pakistan. But coming back to the US and the China relationship, if that's what you were referring to, from our perspective, this is very much an and relationship. China has been a long-standing partner with the Belt and Road, CPEC Phase 1, which was all about G2G and creating the infrastructure, whether it's power projects or road infrastructure, port infrastructure. And now we have just entered CPEC Phase 2.0, which is really B2B. How do we monetize that infrastructure in terms of taking, with special economic zones, etc., taking that forward. With respect to the US, the way we look at it, we have excellent relationship with the Trump administration, and there it goes beyond trade. The discussions that we are having now is increase investments, especially in two areas. One is minerals and mining, and the second one is AI, digital infrastructure, blockchain, Web 3.0, and these are both those areas which are going to be real levers of growth for us as we go forward.
Okay, super interesting. And I'm glad you mentioned the China-Pakistan economic corridor. Super interesting. Okay, so building on those relationships, and also you gave me quite a bit. I mean, the remittances are fantastic from this region, right? You said $40 billion that go through into Pakistan. I was looking into the relationship between Pakistan and Qatar, and you're one of the biggest suppliers of LNG. Into Pakistan. The UAE also very strong in terms of exports into Pakistan. And I wonder how you envisage shoring up and strengthening this relationship, because as we said, that is going to help build resilience, not only for the region, but also for countries like Pakistan.
Well, I mean, Qatar relationship with Pakistan, we have a very significant trade, volumes, with mainly LNG, but also, I mean, we import, other commodities, agricultural and clothing and so on. Also, very importantly, recently, the Gulf Cooperation Council has signed an FTA agreement with Pakistan. And this is the first agreement GCC done. Like, we halted, FTAs for many years, and just recently, we have concluded this agreement. And this expected to increase the trade flows with the Gulf countries, going forward. So this is very significant achievement, between both countries. Pakistan is an important country. It's an Islamic country, it's a friend country, brother country. And, in terms of like relationship, we see, things is growing. There are, especially in the new fields, AI, for example, something we talked about. We believe like the future is AI, and it's a very fast moving field. Every day, if you don't catch up, you are late by 100 years, And this is something that we believe like this is one of the key, sectors we're going to be investing on, and we will need all the help we can get from, from countries like Pakistan and others, in terms of like building our AI strategy. And we are not only looking at it from data centers, because everybody looks to data centers. Qatar has ample energy, so we should do more data centers. I think data centers is a good business. It's going to disappear, at some point, because as this technology improves. But really, the important thing of the AI is in the downstream sectors, and to focus in in the application of AI. And Qatar has certain advantages, look to, for example, in energy, we are a leader in energy, we are leaders in the aviation. So these sectors we can look at and develop the downstream industries here, because we have the data, we have the capabilities, we have the national champions. So, and again, I think in terms of Qatar, Pakistan, I think we have an excellent relationship, and with the FTA in place now, we're positioned to do even more.
So, I mean, let's touch on AI, because, I mean, undoubtedly the race is on, you know.
I didn't mean to drive that discussion to
No,
AI.
no, we wanted to talk about this and also climate change, so no, it's good. I want to talk about AI because the race is definitely on. The minister spoke about critical minerals. The race is also on. China's winning that race. But I wonder if we're sitting in a position, because as the DDMD was talking about, the overall multilateralism that is going to be important in a very polarized world. Do you feel pressure that you have to pick sides or relationship, or who you're going to align with from a technology perspective, if it's the US or China on the security front? I'm sure these are coming up, because when I have conversations about AI or critical minerals, the geopolitical side of things are definitely top of mind.
We're not, we're not in a position, we're not told, we're not, I don't think we're in a position that we pick sides, in this, I think Qatar relationship with the US is very significant. US among, the top trade partners for Qatar and business partners is the biggest destination for our investment, so, and again, most of our, equipments are coming from the US. China, they are number one, receiver of our LNG, exports. So, and again, also we import from China. I don't think anyone can avoid importing from China. So this is, but I don't think we have to choose, or pick, positions. And I don't think this will ever happen. Eventually, I think what's going to happen, there has to be certain regulations, rules, governance, accepted for the rules of engagement in trade, in business, in technology. This is eventually, it will have to happen, whether it's bilaterally, unilaterally, or sorry, not unilaterally, bilaterally, or through the multilateral organizations. But I think this is eventually is going to happen. We see this, what do you call it, trade wars and trade, challenges between countries. But eventually, I think people will go back to our regulations. And so I don't see this as something, any country will be in a position, especially when it comes to trade. Okay, we understand sometimes in politics and wars and everything, there are certain, but when it comes to trade and businesses, I don't think this will ever happen, in my opinion.
Minister, do you feel pressure to pick sides? Align. Economic alignment is geopolitical and diplomatic alignment.
No,
and vice versa.
I've already mentioned that it's not really picking up sides, etc. From our perspective, quite frankly, we are taking a view that it has to be Pakistan first.
Yeah.
So even with respect to AI and technology, and we just formed the Crypto Council, we've learned from other countries in terms of virtual asset regulatory authority, as we move forward with blockchain, etc. But we know what are our peculiar issues. So we need to make sure that we mitigate risks around capital flight. We mitigate issues around KYC, AML, and we make sure that the suitability areas are well covered. And we are getting a lot of help from, quite frankly, including the White House in terms of success transfers. And from other countries, but it's countries' interest first.
Fantastic. Okay, DMD Lee, talk to me about strategic diversification. And you mentioned it earlier, but you've got to be diversified in your partners, in your trade routes, in your economy. This is what's going to build the economies of the future, essentially. And AI and technology and environmental resilience is such a huge part of this.
Thank you. Well, I think AI is a good example of the benefit of being diversified and also the benefit of being open. If you look at the data recently, all the open platforms in AI, they are growing faster than those closed platforms. So that's one example of staying open actually benefit not only for countries, but also benefit technology companies. If you have an open platform, your downloads are growing much faster now in the last 1 year compared to those closed platforms. Number two, we have prepared a AI preparedness index. And our AI prepared index measures along 4 dimensions: infrastructure, innovation, regulation, and labor market skills. And along those 4 dimensions, Qatar is scoring quite well. And several countries in this region score quite well, including Qatar and UAE. And in order to score better in this AI preparedness index, countries need to invest in human capital and in AI-related skills. Qatar has a national skilling program, which is a good example of providing the right skills to the population to be ready for the AI age. The second thing that countries should do is to invest in digital infrastructure, to form international partnership, and to invite foreign investment in the AI field. And GCC countries are also well positioned in this regard because there is an abundance of energy here. So we know that data centers require a lot of energy. So the GCC countries have the comparative advantage in that respect as well in terms of AI infrastructure and also attract foreign investment. The third thing that countries should do in relation to AI is to think about social protection. Think about some jobs may be lost in that process, and some population may have to transition from old jobs to new jobs. So that go beyond compassion. Countries have to think about retrain labor, think about social safety net, think about social cohesion. And finally, in order to be prepared for AI, countries need to think about smart regulation. Smart regulation in the sense that regulation that can support, protect privacy, can prevent biasness, but at the same time to prevent market monopoly, and also to generate a level playing field that we can see competition. We can see human-centered AI that can really support our population, support our every household. So along those 4 dimensions, if countries really invest and also have the right policy framework, we believe that country can have a good potential to benefit from AI.
Minister, yes.
If I can just make 30-second intervention, just picking up on what DMD just mentioned. From our perspective, AI also, we look at it in the context of our youth bulge and the 3rd largest freelancer population in the world. So if these young men and women are doing coding at $10 to $12 per hour today, and if we reskill them and upskill them in terms of blockchain, they can immediately graduate to $60 to $250 per hour. And just think about it. What is the potential for them and the potential for the country?
Brilliant. Okay, we've got a few minutes left. And while I've got you, actually, Minister, I want to talk to me about the environmental impact. You know, the flooding that we see in Pakistan, the gaps are getting smaller. And you're seeing an economic impact already. I want to ask you this question in the context of what do you believe the biggest threat and risk is for Pakistan? Do you believe it's the existential environmental issue? Do you think it's policy, global policy, and what we see on the global front? How are you weighing it up as finance minister?
Yeah, I think from our side, we have to just continue with the structural reforms, and one of the challenges is going to be how do we move from stabilization to growth, because that has to follow at some point in time. But when I talk about 2 existential threats, one is sort of climate change. This year's flooding alone, from our perspective, has shaved off at least 0.5% of the GDP growth. And that's a big number. That's a big toll. So the frequency and intensity of these shocks are increasing. So climate financing, we are very grateful to the World Bank Group, to IMF. We have the financing. We have to just go with a real sense of urgency in terms of investable, bankable projects so that we can lead the curve there. And the second one is which is really population, which is growing at 2.55%. So whatever we grow, the GDP growth. The real growth is always going to be curbed by that, and that's are two big issues for us that we need to tackle.
DMD Lee.
Well,
what are the biggest threats?
Yeah, see, I think Pakistan is a very good example of embarking on the right path of reform and also build resilience. So on top of the $7 billion stabilization program that IMF is supporting in Pakistan, we're also lending $1.3 billion to Pakistan to build resilience. So that is a new facility we called Resilience and Sustainability Facility. So that facility is basically trying to help countries, vulnerable countries like Pakistan, to build fiscal resilience, to build financial resilience, and also to build physical resilience. In terms of fiscal resilience, we're going to help Pakistan to do green budgeting, to take climate risk into consideration when they do their fiscal planning. In terms of financial resilience, we're helping Pakistan financial sector to take climate risk into account when they think about financial regulation, when they think about data, disclosure, and the financial products. And finally, in terms of physical resilience, we're going to help Pakistan and also other countries who receive the similar program to incorporate climate risk into their infrastructure projects, into building resilience into infrastructure, into physical resilience. So we are very excited to continue to support Pakistan and other countries in resilience building. And I stop here. Thanks.
Brilliant. Okay, Minister, what keeps you up at night? Let me ask you point blank.
Well, I mean, I will tell you, the worst day for any finance minister when things are good. Okay. So I think that tells you, always, building the fiscal policy framework is good, but I think discipline is always an issue, especially when things are good, so something, this is, we worry about when things, because, you get under pressure.
So are things good or bad right now?
When things are bad, everybody listens to you, okay? But, I think the biggest thing is really diversification, and to make sure, we are fully diversified, fully, building the long-term plan, especially being independent from energy, revenues. I think this is a key issue for us. Yes, it's not a 1 day or a 1 year or even 5 years or 10 years program, but this is something we have to look at it, for the future. So, building always the fiscal, discipline and the fiscal buffers, to make sure, we invest in other technology and diversify the economy to be able to survive and not survive, but really the intergeneration equity, to establish the same level of living for generations to come. I think this is the key issue for us. And I must say, also, and I think the DMD, mentioned about, the resilience and sustainability fund. Qatar, by the way, was one of the first contributors, and the DMD knows we are one of the founders of that fund, the RST fund, as well as the BRGT fund, which was, a good job really from the IMF really to build these funds. And we were, among the very, very first, countries to, we were a founder of that. We consider ourselves as a founder of that fund, itself with the IMF. So, it's our rules, not only to look to ourselves, but also we are part of the international community, we are part of the world, and we have to be, making sure, because, it's not you are good and everybody else, going through, it's very important, to establish equality, and this is, I think, going back to the main topic of the Doha Forum this year. So equality is very important, and our job really to work not only from political mediation, but also from economic mediations and contributions, and working with the multilateral organizations such as IMF, World Bank, and others. To make sure everybody has a safe and a resilient and a prosperous future. I think that's.
Minister, a brilliant way to end the conversation. Thank you so very much for those words. And I think that, when we see all these disruptions and uncertainty that have come through because of policy changes, it's taking away the important focus on things that really matter, for example, bringing down inequality and the likes of climate change. So thank you so much for this incredible conversation. A big round of applause for my guests, and also a shout out to all the incredible finance ministers around the world that are possibly doing some of the toughest work in the world. So thank you so much.